Hey everybody, this is John. Welcome to the free video. Another day, another whipsaw. So I've been looking for this market to break down and then rip up. So as we were watching this here, when we got about here and in here, I was at this point looking for a rollover, take out the lows, then rip it higher. And then today we got a tweet. So we did kind of edge up a little bit higher here. And so now the question is, are we going to rip up higher? Okay, I at this point do not think we're going to new all-time highs. Obviously anything can happen. But are we going to rip higher into the long weekend and then resume the trend that's been happening? So this box looks like a lot of what happened towards the end of 2018, and then we just kind of puked it up into December. So that's what I'm looking for here. So the question is what kind of setups do we want here? Because obviously this is a pretty volatile market right now if you're trading anything that's market sensitive. And so one answer to that is to trade stuff that isn't market sensitive. Okay, McDonald's. If you'll notice that the market has been very, very volatile here, McDonald's is doing just fine. And in fact, anything fast food related here is doing just fine. Money is pouring into fast food. And the list goes on and on and on. In addition, credit cards. Okay, Visa here is about to bust a move as well. So, you know, in something like this, and I always say is just that you want to find the stocks or the markets that have the least amount of confusing information. Okay, so if we look here at the spiders, there's a lot going on here. There's a lot to process. There's a lot of sectors involved in this. Okay, while some sectors like consumer staples are doing just fine, financials are having a problem, right? Industrials are having a problem. So you've got this kind of mixed bag in the indexes where one day it's up and one day it's down, and it's great for day trading, but can be frustrating if you're kind of looking for more of a trend to trade. So that's what I would say. There's just plenty of stuff out there that's trending. You know, there's also the whole idea here of stocks that are kind of doing their own thing, like Roku. This is something that will most likely continue to rally into the end of the day on Friday as funds want to get Roku on their books. Okay, so definitely a lot of stuff going on like that. And in terms of some of the larger assets like TLT, a lot of people have been asking. I mean, this has been a longer-term hold that we picked up when it was at $123, and it's like, oh my God, now it's at $147. What do we do? This is kind of a macro shift going on here, and this is something that you just want to have exposure to. All right, so we can look a little bit more about that as well. So one question here is why all the volatility? And a big part of this is the yield curve inversion. So it's like, okay, why is this a big deal? So the 10-year 3-month yield curve is now more inverted than it was in 2007. Okay, so that's important because, well, what happened in 2007 when the yield curve inverted? And so when the yield curve inverts, and this is a very short reasoning, or the short version of this, but the yield curve inverts because essentially the bond markets can see what's happening. And it's not that the yield curve causes a recession. Okay, so this was in 2007. There's a yield curve inversion, and everybody thinks, oh, that's what caused the recession. Here, yield curve inversion, that's what caused the recession. Okay, yield curve inversion, that's what caused the recession. No, the yield curve inversion means that it sees a recession coming. Okay, so that's a big misnomer. So basically, here we are again. It sees a recession coming, and so the yields essentially prepare for that. And that's why there's all this uncertainty in the stock market. So on the one hand, it doesn't mean that just because this happened in 2007, but the markets actually still rallied a little bit longer before they rolled over and died. If you guys remember 2008, of course, the markets completely crashed. And so now the question is like, okay, well, if that's going on, how do we trade this market? Because the one thing that I keep hearing in the news is like, don't worry, the rate cuts are going to save stocks. Well, guess what? The rate cuts have already been priced in. So if you look at the Fed funds, It's already priced in 4 to 5 more quarter-point rate cuts. And in fact, right now, a 25 basis point rate cut for the next meeting on September 18th is baked in at 100%. Okay? That means the market already knows and is factoring it in. So it's not going to save the market. And ultimately, what's happening here is we're simply shifting phases. Okay? The phases are accumulation, advancing, distribution, and declining. Now, I've been doing this for 30 years, and I have essentially an index card for each of these phases. Okay? When there is accumulation, here's your checklist of what you do to make money. When there's advancing, here's what you do to make money. When there's distribution, here's how to, by the way, recognize it. And these are the setups that work best. And then, of course, in a declining market. All right? And it's critical to understand that on multiple time frames. So a big part of this is also having tools that can recognize this. Okay? So part of this is we've got utility labels that help to recognize this. Utility labels here that help to tell you whether something's in accumulation or declining or distribution. Okay? And of course, this will help you as well. This is, hey, great, this is now in accumulation, or now it's already triggered declining. And so you got to stay short, right, until that averts itself. And so the right tools are half the battle. And in violent down markets, you've got to know when to get out, or you kind of get your head ripped off. And so there's some things like 2- and 3-day rolling pivots, strategies like that work really well for that. So I'm going to do a deep dive into all of this on Saturday, August 31st. Okay? If you go to this page, simplertrading.com/secret, you'll come to this page, and the basic class here will give you the strategy class for setups, basically kind of an index card checklist for all 4 phases. And we're going to focus on A, how to recognize them, and then B, how to trade them. Okay, basically, hey, here's the best trade setups to do in this market environment. If you're newer to options, there'll be a free Options 101 course, and then a kind of a quick start class, get you established with the kind of trades and stuff that we like to do, plus the indicators that I just showed you. And then, of course, if you want to do live trading, you can do the premium. And then the Elite has 4 days of live trading. Now, both the premium and the Elite, I'm going to do a 2-hour deep dive into the big picture of what's coming. This is important, even if you're not really, if you're trading a smaller account or something like that, it may not be that big of a deal, but it will also provide trading opportunities. But basically, hey, how's this? The United States is going to negative interest rates. What does that mean? Does that mean you should sell your house and rent it? Okay, or should you buy more real estate? Does that mean gold is going to explode, or are there other complications there that we're not seeing? Where do you put your money if your bank account is basically has a negative yield, like what's happening in Switzerland and what's happening in Germany and what's happening in Japan? These are all big deals that are coming to America. Okay? So that's great. So most of the stuff is going to be, hey, back of the envelope, here's your checklist, here's the setups you want to do, so that basically no matter what the markets are going to throw at you, whether it's up or down, whatever asset class, you're going to have a checklist to say, okay, wow, here is, of the 4 phases that any market can be in, this is what it is. So basically, since we're in this phase, these are the 3 setups that I'm only going to focus on. I'm going to ignore everything else. That is essentially what this class is going to be about. Okay? Couple last tidbits here. If you're looking at this and going like, gosh, you know what? First of all, do I have a small account? Is this going to be worth it? We're going to be completely focusing on things that are doable in small accounts. Secondly, if you took part of my small account class in March, or you are part of the small account mastery where you get the alerts, you automatically get a discount. It'll automatically be applied when you log in. Okay, so 20% off Pro or Elite if you did the March class, and then 30% off Pro or Elite if you are part of the Mastery program. All right, because this is stuff that we'll be incorporating into it. And if you're looking at this going like, okay, I'd love to do the Elite, but it seems pretty pricey, if you use the PayPal feature and just choose PayPal credit, you can do 0 down for 6 months, no interest. Okay, so we've had a number of clients who do that, take the class, and then they're able to pay it off through their trading, which is awesome, and that's a win-win. All right, so again, just go to simplertrading.com/secret. This class will start again this Saturday, August 31st at 10 a.m. We're going to do the quick start. That's kind of just get you up to speed. If you're new to Simpler, new to my my basic philosophy of kind of what's going on here, and then the actual strategy class will start at 12 noon. If you cannot attend live, that's okay. This is recorded. And then, of course, this one right here includes all of that, plus the macro deep dive and 2 days of live trading on September 4th and 5th, and that'll be during regular stock market hours. And then the Elite includes all that, plus 2 additional trading days on the 19th and 20th. And I purposely did this, and I spread them out so we could have different market conditions, plus this is monthly expiration. I have not done a live trading class on monthly expiration, which, by the way, is one of the funnest and most productive and profitable days you can ever trade. So there'll be a lot of fun bonus trading for that. All right? It's going to be a lot of fun. If you guys have any questions, give us a call. Otherwise, looking forward to working with you at this very important junction in the markets, because it's about to hit the fan.